Hello, traders, you're watching week review of stock market presented to you by ИнстаФорекс news team and me, Kate Недачина. On Friday, the US stocks closed in the green, having recoupled the losses caused by weak labor market statistics. By the end of a rather mixed trading session, the S&P 500 got up by 0.2% to 1,842.37 points. Over the week, it added 0.6%, and that was the first weekly gain this year. The shares of the utility companies showed the most impressive performance, with the value growing by 1.4%. The Nasdaq Composite rose by 0.4% to 4,174.66 on Friday, while the weekly growth equaled 1%, which occurred for the first time in 2014 as well. The Dow Jones was the only index to be moving against the general uptrend. It saw its value dwindle to 16,437.05, losing 0.2% as compared to the previous Friday's close. As for the macroeconomic data released on Friday, the report from the United States Department of Labor determined the mood of investors. The point is that the American economy added a meager 74,000 jobs in December. The gain in payrolls was the weakest since January 2011, and this is a telltale sign that the US economy is fragile at the start of 2014, no matter other indicators. At the same time, the US unemployment plummeted from 7 to 6.7%, the lowest level since October 2008. However, this decline can hardly be taken as a signal of improvement on the national labor market. It rather suggests that more and more Americans go desperate and give up attempts to find a job. Meanwhile, Alcoa, the largest U.S. aluminum producer, reported losses in the fourth quarter, shortly after the company saw its stock slump in price by 5.4%. On Thursday, in order to settle the barring bribery scandal, Alcoa paid $385 million in penalties to the Securities and Exchange Commission and the Department of Justice. Moving further, the shares of Five Below Incorporated cheapened by 7.2% after the company offered a rosy earnings estimate. Now the retailer expects 44.46 cents per share for 3 months ending January 1st instead of 49.51 cents previously. The shares of Gap Incorporated ticked up by 1.1%. As the company foresees a profit of around $2.65 per share, while its full-year earnings range is $2.57 to $2.65. At the same time, the corporation representatives noted that the same-store sales were flat in December, while according to analysts surveyed by Thomson Reuters, they should have increased by 1.5%. It was a week review of stock market. Bye.